All right. What is up, traders? What's up, tycoons? Super excited for today's video. We're going to talk about embracing market turmoil and staying invested versus exiting during financial crises. Okay, so the 2008 financial crisis and the 2020 pandemic were like roller coaster rides for that nobody wanted a ticket for. Financial advisors faced the Herculean task of soothing their clients' frayed nerves as they watched their balances dip into the red. Overwhelmed with emotion, some of these clients likely considered jumping ship during these tumultuous times. However, abandoning the ride could have caused even more damage to their portfolios in the long run. So we're going to go over and stress, the importance of, just staying in things for the long run, okay, and being a long-term investor, and, focusing on your long-term goals and not the short-term panics, whether it's, a few months, such as the 2020 pandemic, or even a couple years. Right, the perils of timing the market in the 2008 financial crisis. So we have a nice chart here showing, the S&P 500 total return. Okay, and then we have the total return with cash between 2009 and 2010 growth, and then we have the total return with cash since 2009 level growth. Right, and you can see the difference in the comparison between them. Okay, so navigating a market downturn can feel like trying to catch a falling knife, and pinpointing the bottom is no easy feat. But even if you could, re-entering the market could leave a lasting scar on your long-term returns. Picture, for an example, all right, an all-stock S&P 500 portfolio spanning 20 years from Q2 of 2003 to Q1 of 2023. If you cashed out at the nadir of the 2008 financial crisis and jumped back a year later, you'd be looking at a 7.4% annualized return. Not too shabby. But if you just hung in there throughout the turmoil, a buy and hold strategy would have resulted in nearly 3 extra percentage points, about 2.9% of return per year for an annualized return of 10.36%. Now imagine you bailed at the bottom of the '08 crisis, but never plunged back into the market. That's when you'd really feel the sting with a dismal negative 0.9% annualized return gnawing away at your portfolio. Right. And so you can see here, right, if you had 98K in that 98K, basically you just exited here at the bottom of the, 2008 financial crisis. All right, you would have had that still same 98K. All right. And it actually would have gone down a little bit, from inflation. All right. And if you had, just been investing shortly afterwards, okay, that would be about a 7.46% annualized return, and then a 10.36% if you just stayed invested really throughout the whole entire time, right? So, it's a really good visualization, right? Like this is you just exiting right here, boom, and then, you're stuck with that money. All right. And this right here is if you just kept, holding your portfolio throughout the entire time. And then this right here in orange is you trying to get back into the market, right? Okay, so timing is very, tough to do. Okay, it's really, really tough to time the market and try to figure out when is the best time to buy and sell. And this video is going to give you guys some really good visualizations of that. So make sure to smash that like button and subscribe to the channel. Now, the next one, all right, we're going to talk about the pandemic, okay, and how staying invested prevailed over market timing during the pandemic, even. Okay, and so you can see the S&P 500 total return, and then you go to cash of March 24th, 2020, right? And you would see that you're left here with this result, right? If you would have just stayed invested, you would have 12.2% annualized. And if you would have, sold and then tried to get back in, okay, you'd be at a 9.74% annualized return. So to break it down in further detail, okay, a more recent example is what would have happened if you went in and out of the market in 2020. Let's take that same $100,000 investment using 10 years from Q2 of 2013 to Q1 of 2023. If you hopped out of the market for 1 month at the 2020 pandemic crash depths, you'd be looking at a 9.74% annualized return. Again, a fine result, but missing just that one single month in the market meant leaving 2.48% on the table every year compared to the buy and hold strategy, which would have netted you a 12.2% annualized return. Those who decided to park their cash at the bottom for good forewent a staggering 6.82% in annualized returns. Talk about FOMO. So that's basically it, guys. Okay, 2022 was a very brutal market, and 2023 has been really amazing. Okay, the Nasdaq actually just made 52-week highs. The market's been really going, very well. And if you missed out in 2022, or you're missing out on the gains now because you sold in 2022, I just want you guys to keep in mind, the results of long-term investing. Right now, something really shocking that I actually just discovered was most people's long-term and their idea of long-term is actually about 1 to 2 or 3 years, right? Now, whenever I've heard of long-term, or generally when I speak of long-term, I'm thinking 20 years at least, right? I'm thinking like over a very, very long term. Is generally, my thoughts basis and, kind of how I think of things when it comes to investing. Maybe that may be because of my age range. I'm still in my 20s. Let me know you guys' age range. Okay. And what long term means to you. Does it mean something, a little bit shorter in time than 20 years, right? Is it 1, 2, 3 years, right? Is it 5 to 10 years? Or are you looking at the next 20 to 50 years, right? What are your thoughts on that below? Or let me know what your thoughts are down below. All right. And as always, the content provided in this YouTube channel is for informational and educational purposes only. It is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals that appear in this YouTube channel are not registered financial advisors, and trading in stocks, bonds, commodities, and crypto involve a significant risk of loss and is not suitable for all investors. Okay. Be sure to read through the full disclaimer. Thank you guys for watching. Smash that like button and subscribe to the channel.